In the 209th Block Talks, we speak with Ivan De Lastours, the blockchain and crypto lead at Bpifrance, who tells us how sovereign funds are approaching crypto. I'm your host, Mauricio Magaldi, and this is Block Drops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption, and are meant for educational purposes only. This interview was recorded in 2 sessions, and we will note in the audio when we're changing from session 1 to session 2. All right, everybody, I'm here with Ivan De Lastours, who's going to tell us who he is and what he does with blockchain. Ivan, welcome to Block Talks.
Thank you. I work for Bpifrance, which is the French sovereign wealth fund, and I'm the random crypto guy there. That's my email signature. It's half a joke, half serious. I work there since more than 8 years. And when I arrived, I instantly say to myself, we should support the blockchain ecosystem. So Bpifrance is a mix of a sovereign wealth fund and a development bank. So we sustain projects with financial products. We're a bank, we're an investment fund, but we have a high sensitivity level to innovation. And as we are a financial institution and we love innovation, blockchain was kind of a very natural path. Before this, I have a computer science background and did some complementary studies. I have 2 masters in finance. And again, like technology and finance, blockchain seemed pretty obvious. Discovered, did some finance, mergers and acquisitions, and then worked in a R&D lab on big data. Big data was AI before it was cool. And first contact with blockchain 2013, some friends from computer science school were talking about Bitcoin, had a very classic reaction, said that's not a real thing. And then Mt. Gox happened. So I have all the emails. So I'm kind of ashamed of myself, but it's also a good reminder that it's a normal reaction. And came back in 2015 because I was working at Deloitte, and Deloitte, as a good consulting firm, was trying to sell some blockchain advisory. So we were a group of passionate people. It was great. We didn't sell that many things because it was 2015. Nobody really understood, and the mission were kind of very incomplete. But we really saw the potential. And some of the guys, and I'm really, at the beginning you always have some mentors, people that first answer to all your silly questions without judging you, and some people like you discover the same thing at the same time, and you just look at each other like, wow, this is amazing. You have kind of a Goonies atmosphere. So this is amazing, but the problem was, how do I contribute? How do I work in this space? What can I do? Of course, you can buy some crypto, but it's very basic implication. So the idea was first to meet entrepreneurs. So we did the first mapping of the French blockchain ecosystem. There was one before, to be really honest, from the Chain Tech, which was an old blockchain association, but you had like 10 companies, and we had something like 70 companies, and it was great because we met all these people. And then the idea was like, okay, we're a bank, we know these companies, maybe we can finance them. We can do grants, loans, equity investments. So that's how it kind of started. And now we have 150 million global exposure to the blockchain ecosystem, mostly in France, but also international. So we do grants, loans, equity investments, investments in crypto VCs, and we just launched a token investment strategy. We're not allowed to say fund for the moment for regulatory issues, but we're pretty happy. As a bank and as a sovereign fund, we are advanced in crypto, but we are not crypto natives. Many crypto companies are doing amazing stuff. We see ourselves more as a bridge, trying to test some stuff. We also buy some tokenized money market fund on our balance sheet. So the idea is to see what we can do, and we have a very humble position. Like, we're here to learn, and to find the best bridges between these two worlds, between TradFi and DeFi, or maybe between security tokens and utility tokens.
Interesting. That's an interesting approach. It's like a Web 2.5 investment strategy of sorts, if you will, right? Um, I, I, I've been doing the podcast for 5.5 years almost, and one of the things I obsess about is use cases, because I think use cases are the easiest way to understand the power of the technology. Even though we built pretty lame use cases over the years using blockchain, some are very unique and some very innovative. You mentioned DeFi just now. From all these experience you've had over the years, are there any particular use cases that either helped you confirm that this is the future of financial technology, or maybe challenge your belief into that same statement? Can you give us a little bit of an example of which, one or two of each kind that really helped you remain confident, or put your confidence to test?
Really good question. Thank you. For use case, we love to call it narratives or sub narratives, because it's still blockchain is an underlying technology, and you test it to something, trying to change, to decentralize it, trying to change people work, or people do business. And we work with 200 narratives and some narratives. So there's a lot of potential, and that's what makes blockchain quite unique. I mean, non-custodial wallet is a narrative. Web3 gaming is a narrative also, and maybe NFT trading in a Web3 game is a sub-narrative. And you kind of compose all these, uh, and then the good news is that we are a long-term investor, so we have time. So we can see what's trending, what's working, what's not working, what are the challenges. Supply chain was a big thing. The problem is that you have to reconcile a digital data to a physical reality. And that might be tricky. I mean, it's not because you put something in a blockchain that it means it's the truth. It is a good sign of faith, but things are more complicated than these. But on the other side, on full digital use case, like digital money, digital assets, this is the best, because TradFi goes then the other way around. TradFi came from a physical world. If you see securities services, they have still some papers, processes. They have still some fax machine, but they have a good reason, because they created this business where you were trading securities with, in French, we say corbeille, so with a little box, and you are putting the orders in the box. So they came from a physical world going to a digital world where crypto is digitally native. So that's why it's so efficient. That's why DeFi, nobody can beat DeFi in a way. No bank can do better stuff than DeFi because everything is optimized and everything is digital. Where in a bank, you will always have one guy from the middle office, the back office, the front office that would say, hey, what is this? How can confirm this transaction? But maybe for me, the most impactful thing, and I'm a bit emotional about this, it's when I had the luck to deploy my first smart contract. And I'm not, I can say it publicly, I'm not ashamed anymore. I'm not a great computer scientist. I know how to code, but this has been quite painful years because I really wanted to understand. But everybody has some talents, and that's not my strong suit. But I love tech and I love to code. And you have all these moments when you are a computer scientist discovering new technology and just realizing how powerful it is. GitHub was one of them. Like, because before you had some shared reps called SVN, Tortoise SVN, CVS. Like, it was a repository to share code, but it was between your colleagues. And when you just saw GitHub plus Stack Overflow, where someone in the world, most of the time a great Indian guy, had the exact same problem than uh, you just feel like, wow, this is a new step. And smart contract was exactly that feeling. Like, wow, I just deployed code on chain. Everybody can interact with it. And it's decentralized. I cannot stop it. And that's when I realized how powerful really this was. You always have, kind of an instinct about a technology, saying, I feel this is exciting, this is great. But as you mentioned, you need kind of confirmations. It can be market confirmation, it can be technological, it can be use case, or people talking about it and validating the potential. But I remember very well this smart contract moment.
I love that story. And in terms of excitement, what are the things that really excite you in the industry today? Because we're recording this June 6th. This week we saw the IPO of Circle, the one of the most prominent stablecoin platforms in crypto, very influential. And this seems to be the mark of the, maybe the stablecoin summer. As we like to say in this industry, there's always a summer of some kind. And this seems to be the stablecoin summer. This to me, I'm also for a former financial services guy. To me, it's exciting to see this because this is almost like a confirmation of all the thesis we've been playing with, but it's not all of it. So is this exciting to you? Stablecoins are exciting to you. What excites you today in the industry?
So, totally agree. I mean, I would say that again, you have all these narratives, sub narratives, and you have your favorites one. Mine are, for example, DeSci, decentralized science, because I worked in an R&D lab, and I have seen day to day how broken science was and how inefficient, even if the people working in labs are the most brilliant I've worked with and the most humble people, but it's not really efficient in many ways. So I'm a big fan of DeSci, but I must realize that it's still a very nascent narrative. Okay, you have Molecule, you have companies like this, but it's still very early days. Uh, so the stablecoin thing, the good news is that it's so real and it's so impactful that it kind of changed the game. Like before, everybody was challenging blockchain with use case, with speculation, with financing terrorists, and blah blah blah. But stablecoin, I think, is the killer use case because it shows how efficient blockchain can be in a global financial system. And it goes beyond this, because before everybody was like, yeah, but stablecoin, it's small, and it's not small anymore. It's 250 billions market cap, and the circulation and the velocity of circulation makes it so you have to rework some data, and but basically it's like Visa already, and not that many people have this application. This has a direct impact on monetary policies, and this is a game changer. I mean, when in the early days, and this is very personal opinions, but in the early days, when you are speaking to central bankers or to Bank of International Settlement about these things, uh, they were really looking at you as a weird guy. I mean, now they listen to you because they just realize that stablecoins are very efficient and could replace somehow many technological rails that the central banks are using. The Circle IPO is just one step, and there will be many steps. And the Genius Act that will be finalized soon, and should be a very positive text, will just foster the development of stablecoins. And I can quote him, but a central banker told me if stablecoin market cap reach 1 trillion, we would consider there is a risk for financial stability. And if we do kind of blockchain and financial service history, everybody remembers Libra and Diem. That was the first time central banks really had interest into blockchain, because someone basically told them, I will do a bank without being really a bank, and I will be more efficient than banks. And I have great commercial partners to do so, business partners. And honestly, it's not a secret. Most central banks freaked out. So G20, FATCA governance, everybody was like, okay, let's shut down Libra. And I think many people can speak about this way better than me. But there was a vibe. And now it's the second round. I mean, Libra is not even in its final form. It has evolved, and there will be a second round. And I'm really serious about this. Like I am very confident that there will be another fight between classic central bank model and stablecoins, or an equivalent. Because at the end of the day, central banks still decide what is the money and what's not, and how the financial system, how the interest rates are given, how the wholesale central bank currency is distributed to commercial bank. You have all this very, very kind of established way to do finance. You know, all the stuff that an old teacher tries to teach you at business school, but you don't get it. And it's funny because it's maybe 20 years later, because of crypto, that you finally get it and say, okay, I understand the system, and I understand what it means, what financial stability means, and how important it is. But the problem of this system, it's not very technological. It's very slow. And crypto is a crazy leg. It goes so fast. And so you have kind of this run between these two worlds. You have the security tokens, kind of very B2B, slow, regulated. And you have this super rapid leg, crypto, on technologically amazing, with the best talent in the world contributing to it. And we hope, because we want to have a kind of a positive vision, that these two worlds will merge at some point. I don't know how, I don't know when, I don't know which factor will be kind of the major factor, but it will happen. And that's where we are trying, as a sovereign fund and as a development bank, to help this collaboration between the two worlds. We're not crypto natives. We're a bank, we're linked to the states. In a way, we're very old school, and you don't want to see our IT systems. But we understand that something will change. And on the other hand, we see great entrepreneurs, great teams doing very, very innovative stuff and very efficient stuff. Uh, we hold some tokens of the Morpho protocol. It's a decentralized loan protocol. We are just amazed by the efficiency of it. We do loans every day at the bank. We have 40 billions of loans. We have so many people to do it, where Morpho just do it instantly. And you have a risk manager on top of it. Can be Steakhouse and I don't know, the Morpho team, they're maximum 25 people. And for the same volume, we would need, I don't know, maybe 600 people. And even a fintech can compete, because the fintech would be 120 people. And they would look like the cool kids. The real cool kids are the smart contracts, because it's so much more efficient. And most of the argument of the TradFi world is like, yeah, regulation. And that would be a very important point and a very personal point, but regulation needs to evolve. And I can't stand anymore regulators talking about technological neutrality of regulators. First, that's wrong. A regulator has a website, so it made a technological choice. So otherwise, it would be pen and paper. Secondly, this blockchain technology has so many advantages if you're on chain. If you're on chain and you're a regulator, that's great. You can monitor everything. And that has also some downsides. That's why Midnight is working on an alternative model, because you want transparency, but you want also a good level of privacy. And this is what I don't get. And I think it's because most of the regulators, unfortunately, don't have a very techy approach. But okay, you have two ways to regulate an exchange, a centralized exchange. You can do it the old school way. You do meetings, they come with their lawyers, they do a big file, hundreds of pages explaining you that they have the best cybersecurity team in the world that just left 2 days ago, but they won't tell you that, that they are experts. But if you really want to monitor efficiently a centralized exchange, you just ask the public addresses of the biggest stablecoin wallets. And you tell them, if that moves more than 5%, we are coming. Like, we're doing an audit. That would be a very efficient way and a very cheap way to control things, rather than coming physically, asking IT developers, what are you doing? What are these smart contracts? And we have, this is a huge debate we already had, and I think it will be a never-ending debate about code is law. Code was law until the DAO hack. That's kind of a long time ago in crypto years, but basically Ethereum There was a great project called the DDAO. Everybody was in it, and it got hacked. And some part of the community say this is life, but code is low, so we'll continue. And a prophet called Vitalik told everybody, maybe you can do it differently. So let's do Ethereum, like new version. Let's roll up some blocks and let's do it. And the other chain was Ethereum Classic. And this is super interesting because I think we will come back to this debate. The more we trust the technology, the more power we'll give to it, and the more bugs or excuse my French fuck ups there will be, the more we will go back to the classic mode.
This is where we switch to part two. Picking up from where we stopped, we started talking about regulatory developments and the stance on the regulators changing over time. From the first half of this conversation to now, it's been 2-3 months. A lot has changed since we started speaking. So I would really want to double click into what has been the last 3 months in that particular aspect of your own experience.
Yes, thanks for that. I hope you have a good AI to help you merge the two.
I do. It's called AI. It's A is my right hand, I is my left hand, so they work together.
But yes, I would like to focus on a very high level but very important subject. And I had the chance during this summer to meet a very discreet guy called Hashby Monk, and I really praise him here. He's a specialist of investments, and he's also a teacher in engineering school at Stanford, I think. But basically, we had the chance to talk about the big movers of finance. In a way, how and again, I will try to copy with the right copyright what he said in a very humble and very very simple way. Basically, if you want to change things in the world, if you want to influence the world, you need to influence 4 big pillars. The first one is government. The second one are asset allocators, and we're one of them. Then you have financial intermediaries like banks, and then you have companies. Everybody has money and have stakes. Like government would represent 100 trillion, asset allocators would represent 150 trillions. Banks, financial intermediaries would represent 100 trillions, and the companies are representing 200 trillions. Half of it is public, traded stock, half of it is private. So what we call private equity. The super interesting thing is that money moves between these big guns. And it's the movement of the money that makes a narrative. Like, let's take an example like ESG. Government talked about it because citizens talked about it. Then they said to big funds, endowment funds, state funds, like, you should pay attention. So they said, okay, we will invest into ESG products. And banks or BlackRock suddenly decided to do an ESG product, financial product, to invest into ESG companies. And the cycle went this way. 1 cycle, 2 cycles, and ESG was really a thing. The funny thing is that now we're going backwards because governments say, you have to forget everything about ESG, or we have to change the narratives. But it has to go through the cycles. And that would be kind of the the heart, the motherboard, the real heart of the financial system. Then you have, of course, a first circle of influence. It can be the media. Podcast is one source, of course. It can be the lobbies. It can be the NGOs. It can be the different jurisdictions. It can be kind of the regulation, the norms, FATCA, Financial Stability Board, IOSCO, regulators, G20, Davos is a place of influence. It can be the big techs, and it can be the central banks. And it can be the Chinese industrial policy. A lot of influences from this first circle. The funny thing is that we've been taught in school that the central banks were kind of the god of finance. But if you really watch the movement, the central banks can follow the dance. They can influence the pace of the money movement between the government, the asset allocators, the financial intermediaries, and the companies. But they cannot decide. They can help, but they are participating indirectly to this big money movement. Then you have a second circle of influence, which would be a bigger one: geopolitics, education, culture, activism, just global feeling. And what's the link with crypto is that if crypto wants to be something bigger, it needs to do the dance. It needs to go through this cycle. And this is way trickier than convincing some crypto investors or some degens to invest into a project. It's a long-term vision. It's a high multi-stake problem with different interests. The good news, I would say, is now with the Trump administration and US acceleration is that governments are in. The financial intermediaries are in. BlackRock is in for sure. The companies, they are there. I mean, Circle did a tremendous IPO. Maybe it's expensive. You can have this debate, but this is a great IPO. And so everybody is there except, I would say, the asset allocators. These are missing people. Of course, some endowment funds publicly stated that they invested into crypto, or they invested into crypto VCs or crypto hedge funds. But the stake they have is still quite low if you compare it to the rest of the ecosystem. And we already talked about this, but there is a hack in crypto, is that retail investors kind of provoke these cycles and accelerate these cycles. So now, in a way, a retail investor has a stake in this money movement because he invested some money.
Now, in this particular argument, I think one of the highlights of your discussion is the role of central banks, which, yes, as an individual, we tend to think about this kind of overpowering institution that um, dictates the rules upon which every market moves and things like that. But not only this is also being challenged, it is also not how crypto native crypto works at all. So, in your view, in your recent analysis, what is this being shaped or shaping into for central bankers in general? Will decentralization really threaten the stance of a central bank or central banks in general? How does the other players or pillars in this particular discussion play with or against the shape of the future central bank?
It's a very good question, because the real mandate of a central bank should be financial stability. And there is kind of a hidden mandate of every central bank, and some of them assume it more or less. It's competitivity. I mean, you want a good functioning finance industry, a powerful financial industry. Uh, and the two are linked. Some central banks want to stay as neutral as possible. Some central banks want to have more influence. And the funny thing is that nobody agrees inside the central banks. So that's why we always talks about the doves and hoax. I think I'm not sure about the translation here, but basically it's the people, because it's a global governance. There is no one guy that decides everything at central banks. Some people want to be more aggressive and maybe to lower the interest rates so the economy can be can have more velocity, and that this money cycle goes faster and there's more liquidity, and some people want to have higher interest rates so to bring more financial stability and kind of slow down in a way the economic cycle. This is another big debate, especially right now where we have all this influence from some administration without naming it, and it's part of the game. I mean, if you have really an emotionless approach of things, what the Trump administration is doing is super smart because they align the planets to, in their ways, take better decisions. You can debate this, but from a pure organizational point of view and kind of power machine, this is super smart. So central bank has a role to play. And it's very important. Even if they don't make, they don't decide everything. And in a way, they are more supporting the economy than building it from scratch.
I didn't mean to just side or single out central banks. I think they agree with you. Um, Depending on the jurisdiction, you have different regulators with different mandates, right? Central bank's kind of a standard, but if you go, say, to the UK, there's the FCA and the Bank of England. If you go to the US, you have CFTC, and you have FCE, and you have the SEC, and all, every subsector of the economy or the financial services industry has its own flavor or regular. If you go to Asia, they have different setups and things like that. In your opinion and from your experience, which regulator or regulatory type agency is better positioned to enable crypto as an industry from all the markets you've been discussing or speaking with? Because this, as I think we've kind of touched upon on our previous session, there's this geopolitical battleground that is starting to take shape, and for a very curious reason, the regulatory agencies play a big part in the ability to compete of a particular jurisdiction. Your commentary on the U.S. is kind of on point there, but there might be, maybe my question is, does crypto need a dedicated regulator, as some jurisdictions have already appointed, to enable crypto as a part of the real economy, or what is the design there, in your opinion?
Again, very good question. I mean, this is linked. This is linked to the first question because crypto was out of this picture for many years. All the things I'm talking about, crypto was really out of the picture. Nobody even considered crypto. The great thing is that crypto entered this game by the big door with this geopolitical financial competitivity topic. through the stablecoins, and this really opened everything, and everything is connected. So basically, a stablecoin is a weapon of economical influence. Let's put it that way. When you transact with a stablecoin, you use an underlying currency. And the good news is that a stablecoin is stable, as you know, but the yield bearing is not every time for you. It can be for someone else. And this is a big debate. And this has been part of debates in every central bank because everybody gets it. Um, how big finance works, it's really simple. People tend to make this complicated, but it's really simple. The central bank gives you a rate, and when you're a commercial bank, you're allowed to give, in a way, slower rates to people and to make money with the difference of rates. This is the classic banking equation. It's working really, really well because it's very simple, and it has very common patterns with crypto. I mean, we all knew the DeFi summer, this kind of stuff where you had these first incentives. I mean, you need incentives at the beginning to make people buy in, and but the incentive of central bank is very simple. Is to say, I give you for, I don't know, 3% risk-free rates, and you can charge lower rates to your, I mean, you can give back lower rates to your clients, and you can charge bigger rates to other clients. I mean, if for deposits on the one side and for the money you lend on the other side. And stablecoins are kind of rewriting the big equation of this, and it's getting more and more influence. And what changed is that the Trump administration went vocal about this. They are, I mean, you can like it or not, but you cannot say that they are hiding stuff. They were very vocal, saying it's a financial weapon. It is kind of a way to impose, to continue to impose dollar to the digital economy and to the global economy at the same time. So this is what's really interesting now, is that crypto is at the party and it's at the ball. The problem is that it's only the first hour of the party. You don't know what can happen. Will the security come out for you? Will exactly? Will someone insult you? Will everything, murders are in the building? So this will be super interesting because, as you mentioned, central banks, then you have the BIS, which is kind of the central banks of central banks, but doesn't have a real mandate to do this. And they hate crypto. They've been pretty vocal about this on the other side. And you're in the world where everybody has time. Nobody is stressed by the next paycheck, or it's a long, long game. So I cannot see a blue sky for crypto. I am sure that there will be different chapters and different scenes, and some scenes will be good for crypto, and some scenes will be bad for crypto. And this is why this is super interesting right now, because crypto is at the table. Everybody is seeing it. You cannot deny it. Before the central bankers, they were like, "What's this? It's non-significant. It's useless. It's a geeky technology. It's for speculators." I mean, then it's there, and you say, "Hey, this guy is eating at the same table than you."
I like that analogy. Also, because I'm hungry. But let me ask you this then: what is in the current horizon, say 6 12 months? What are the things, one, that get you most exciting currently, and how do you see them evolving in this short-term horizon, 6 to 12 months?
So the good news is that we have good um, good vision for stablecoins. I mean, we have regulation clarity for sure. So basically, it's stablecoins. It's not really yield bearing. You might have some sophisticated product with yields, but it's not a frontal attack on the deposits. Uh, the but the good news is that with this regulatory clarity, everybody is in this new game. So the banks are there, the crypto companies are there, Circle is Tether are the most visible, and you have the fintechs. I would say Stripe, Robinhood. So everybody is there for the same cake, and everybody has a very interesting narrative. Basically, the crypto companies are like, we know tech and we know crypto, and the banks don't know, and the fintechs, they're too late. We're the cool kids, and we're so cool that we will become banks and asset managers, which could be true. Then of course you have the banks that are like, hey, we already heard this narrative so many times, like everybody was supposed to kill us so many times also. But no, we will survive and we will get the biggest part of the cake, the lion's share, because we know finance and we know how it works. And they have good weapons because they could issue their own stablecoin based on the trust they inspire as a bank, but they can also do tokenized deposits, which is, we will come back on this, which could be a kind of a stablecoin killer somehow. Uh, I, the thing is that basically, again, very simple vision, but why I told that the bank is making money on the difference of rates. But the real McCoy is that you're allowed, and again, it's a great privilege to be a banker because you're allowed, when you have one, to lend 10 based on the fractional reserve. Otherwise, a bank would just do Lombard credit. I mean, all the Italian banks were kind of stuck with the balance sheet. With this system, you can kind of invent a higher balance sheet. I mean, allow people to have higher balance sheet. It has risk, but this is also great for an economy to develop because you're not stuck with the size of the balance sheet of the lender. With the stablecoin, it's a 1-for-1 ratio. And then you have the double dip with the Basel Committee that tries to impose very high restrictive ratios for crypto holdings. This might change because every bank is now very vocal about these rules and that they are outdated. But if you manage legally to tokenize deposits, then it's not a 1-for-1. It's a fractional reserve, so it can be a 1-for-10. So you issue one deposit part, $1 of a deposit, and in a way you can issue 10 times more. So this is not fully solved right now, but this is a very interesting development, and banks should look at this really, because issuing a stablecoin right now, what's the value added? Issuing a tokenized deposit where you can make more money and have advantages even for retail could be a very good answer.
Oh, I love that vision. I think when most people think about tokenized deposits, they think on the same shape and form as a stablecoin. But the fact that you are a regulated bank with leveraging capabilities and quote unquote trust probably makes it for a much higher multiplier in the sense of fractional reserves than the stable coins, which kind of create this interesting tension between the stable coins being seen as this kind of crypto construct, but being more conservative on the pegging, but the deposit tokens are issued by a regulated entity, but can be a multiplier leverage, which is inherently more risky than a one-to-one peg. So it will be a very interesting dynamic, and I like where you're going with this, because it will impose to both banks and regulators the need to actually have a sit down on risk management, which we haven't seen a lot in crypto.
This is a very good point, and this is a real, again, like I was saying, there will be multiple scenes and chapters. This is a big chapter for the crypto community. In a way, we're digital natives. We respect some rules. I mean, Cody's law was the first rule. Then we kind of tweaked it for between Ethereum Classic and Ethereum. But more seriously, we love this kind of hard written rules, saying it's a peg. You cannot cheat it. You cannot, say I will pay you later. When you enter the big financial world, the rules are not hard coded. It's more complicated. It has good sides. During the great financial crisis, technically everybody was bankrupt. So because the trust was gone. But luckily for the global economy, the Fed basically said, hey guys, send us some Excel sheets. We'll watch what's happening and we'll find a solution. I mean, and they have found a pretty decent solution. I mean, then it created more regulation because it was needed. But basically, if crypto entered this world where, in a way, you can cheat with some hard-coded rules, what will the crypto community accept? What will they do? Will they go back to the old school crypto systems, saying I trust the machine more than a banker? Or will they evolve and say, hey guys, this is a necessary next step? Like, and this is a very, very open question. The only thing I don't have the answer. The only thing I know is that this is a double-edged sword, because crypto could be the perfect scapegoat for a financial crisis. If stablecoins grow with influences, with have bigger influence, and it's a perfect scapegoat to say, hey, you see, this is the fault of crypto. This is crypto's fault. Like all these very speculative and risky investments, this Bitcoin thing, I knew it. It was dangerous. And so that's why, again, I don't know what will be the next chapters, but I would say there are still a good 800 to 900 pages to the book. And we have to be very careful about the next steps. If you want a career in crypto, you better be patient and have a very long-term approach, because all these cycles, and now you have more and more stakeholders. I mean, before, for some crypto projects, basically, you only had to check the team. If the team was still active on crypto Twitter and was publishing on GitHub, that was a sufficient due diligence. You were like, okay, the project is alive. This is great for crypto. Liquidity will come. Now it's way more complicated than this, because it's a bigger playground. So, in a nutshell, I would say that it's great news that crypto is at the table, but we have no clue about the next steps. And the financial intermediaries can be false friends. They're happy to be there if they make money, but if there is a regulatory backlash, if there is something, they wouldn't be there to save crypto in a way. And you have to respect that. It's businesses. It's not foundations to help technology to grow bigger. So this is why it's a very interesting moment, because it's really not over. We have two all-time highs. Everybody is very excited. You have lots of projects, but we don't know, and it will also depend on the different answers, because the banks and the central banks have been very vocal about crypto, and you were talking about the most advanced banks and central banks. I would say the people that really are very advanced in a way are the Brazilian central bank, and they are very they have a very interesting approach, but it's more a defensive one, because a lot of Brazilian people are using stablecoins right now. And the European Central Bank, of course, has done a lot of work, because it's not only one central bank, it's 27 central banks, and they began to share information in a very clever way. So they have a good vision. The problem is the execution. I mean, they have a lot of ideas, but for the moment, nobody wants a digital euro. The euro stablecoin is not very meaningful in terms of market cap, so they have challenges. And then, of course, you have the MAS in Singapore that has done a very good work. And, of course, never forget Hong Kong, which would be, and this is not a secret, I mean, it's kind of the first room of the Chinese monetary policy. And it's a great platform to test things and to see what they could develop. So these are the big players. Then you have some interesting project. The Bahamian central bank issued a digital currency, and some central banks have big strengths on some specific topics. The Bank of England, Bank of Japan, they worked on many projects also. But again, there are more followers than leaders here. And that's also what's really interesting. Again, normally you're educated in the financial system to be respectful of the regulators and the central banks, because they decide in a way. Now, everybody has seen that they are late, that they want to catch up, but it's difficult. And you have this relationship with the retail that completely changed. I mean, in the banking world, the commercial bank is an intermediary between you and the central bank. If you have a digital currency issued by the central bank, you don't have any intermediaries anymore. So in some banking circles, this is a revolution. This is not possible. And this is very interesting, because especially in Europe, we have the luck to have great discussions. I mean, people most of the time wants to mimic the whole system. I don't see a central bank doing something completely new. You can imagine kind of a system where a central bank issue a currency, a fiat currency, on a public blockchain, and then only the banks can move this from the layer 1 to a layer 2, for example, to keep it on public blockchains. This is, in a way, systems that are more acceptable for central banks and for the whole financial community than issuing a direct retail currency, digital euro, to the retail. And what's funny is that it could be a revolution, but it's scary for everybody. Nobody wants a digital euro. The retail is like, what the central bank will do? What do they know about me? Why this big brother wants to to give me a coin. The commercial banks are like, wow, what about my business? I will die. Exactly. And the certain banks are like, wow, more work. We have so much to do with financial stability. Please don't bring us more projects.
Exactly. Oh, and don't even get started on the advancement of AI and how AI can interact with money digitally now in ways that the central bank probably is unaware of and can't predict or prevent. So, yeah, no, I'm with you. I think the shape and form of the central bank for the coming years will be a direct result of how they decide to engage with technology from now on. And it's going to be very interesting to see the different approaches as you laid out for sure.
The very interesting thing is that they might lose some power. And when kings lose some power, there's always a reaction. There's always a reaction. So that's why I'm waiting for this reaction in the next years. I don't know, 6 to 12 months is too early, but I surely expect a reaction from a part of the financial community that will bring a form of a backlash to crypto. And it will happen. I don't see how. I mean, if you go to a central bank meeting and talk about crypto, people are not really. I mean, there might be a trainee that tells you secretly, like, I really love crypto, and that's great. But it's more it's not. It's more a necessary curiosity right now.
It's also generational change because I'm seeing people coming into regulatory agencies that are crypto natives. They've been dealing with crypto for 6, 7, 8, 10 years, and now they're, as you said, interning, and they're analysts on a regulatory agency. So as the generations also evolve and change, the familiarity with crypto itself will be more prevalent, and hopefully that starts to influence some policies and decision making processes in these agencies. I would hope it wouldn't take generations to change because I've been in the industry for 11 years now, and it's just like, oh, can we just get done with that? Can we change the subject? Um, but the fact that there are people that are crypto natives that are joining as staff in these agencies is a sign of the times to come, and maybe that will be potentially the thing that makes the backlash manageable by the industry, having those people who actually understand what the industry is and what the technology implies. So the backlash isn't life threatening. It could make it better, hopefully, but not necessarily prevent the industry from existing. Here's to hoping, I guess.
Yes, and you're right. And we should really, and the crypto industry should really praise these people, these very discreet people working in agencies, regulatory bodies, even law firms, central banks that are helping the crypto community, really, that are kind of, influencing in a good way, and they will never get a promotion for that, and they won't get an airdrop for that, unfortunately for them. And we should really praise all these people that really take a risk on their career to help things, and hopefully it will take less than a generation for these people to have bigger responsibilities and to find the best case solution for the evolution of financial industry. And again, crypto is maybe the best finance one-on-one course because it's practical. Most of the time you win money, then lose money, then win again, so it's very, very
Dynamic.
exactly. So you live it, and then you understand kind of who's deciding, who has influence on the market, what is a short squeeze, what, and it's a great training. And in a way, it helps you figure out that there are different financial systems possible.
Crazy speed as well, right? It's just crazy, crazy speed. Things that take years to happen in regular financial services, you experience in weeks in crypto, which I think is also something to be said about the industry. Now, listen, we're approaching the end of our time here, and I really want to thank you for taking the time twice with me and bringing such incredible insights. Um, I have a couple of questions I'm asking to my guests, and I really want to understand your take on it. First is what your process to keep yourself healthy working in crypto. Do you have a routine, a recipe? How do you manage that?
I would say that to survive in this industry, you need close friends. And that's great because it's a very open industry right now. It's more competition than real I mean, people are sharing information, sharing views. It's a career choice, so we share a lot of things. And I must say that now that I have great crypto friends, uh, for all these years, it's really helping me because you can meet some new guys that will explain you that you don't get crypto, uh, and that's part of the game. And you need also to accept these newcomers and educate them somehow. And it's you don't have to play the OG game like he doesn't know anything, but people that are lasting in this industry, they have tremendous value, and this is the people you should have some deep conversations. And because these, I would say, are the wise guys. uh, I think doing millions on a short, on an aggressive short on a shitcoin is something, and you can do a lot of money with it, but it might not be a life lesson. Lasting 10 years, 20 years in this industry, I think it makes you learn a ton of things, but don't get too lonely. So that's my advice. It's really to find some close friends in this industry where you share things. Because in a way, when you're in the traditional finance and you explain crypto, everybody thinks it's not a job. It's just to do some money. They, most of the time, they just see you as a trader, and everybody trades, but you want to say it's so much more than this. I mean, to me, it's so much more than this. Like, you can imagine. And you need to get close to people that have the same opinion, to say this is a life-changing thing, because these people will last in this industry. If you're just there to make money, it's great because you can make a lot of money in the crypto industry, but maybe you won't last, or maybe you will get bored, or maybe you won't do it to the next cycle. So that was, sorry, it was a bit long, but that would be my take.
No, I love that. I mean, that speaks to mental health as well, right? The mental overload of having to deal with the charts all the time. I mean, I've been in the industry for a long time. I don't look prices at all. I mean, I'm not a trader. I'm a builder, but it's absolutely like I'm people are talking all time highs. I'm like, yay, but it's just really out of my radar. So I keep myself focused on building and learning and studying and getting better at doing what I do. So absolutely subscribe to that. Now, these same people you're talking about, how do you onboard them on a crypto? If someone says, Yvonne, I wanna understand what you understand, how do I get in? How do you usually onboard them into crypto?
I have now kind of a good list of sources, and I tell them these are the first sources, and then you have to find mentors. Everybody had mentors. I'm very respectful of Arthur Breitman from Tezos, which helped me at the beginning. He explained me very simple thing. I felt so dumb, but he really took the time to explain me stuff, and I'm really, really thankful for that. And these are the kind of guys, and it can be less known people. There is a guy who's the chief financial officer of the French Ethereum Association. He's a gem. He's so knowledgeable. It's great. and he's been a friend for all these years, and I'm really thankful to know him, because he has always good advices. He's chill, is not checking the charts all the time, and in a way is to meet people, and then if you feel a good connection with someone, but a genuine connection, not someone that is trying to sell you NFTs, a new NFT collection, or something genuine, like there's just no money implied, you just get along well, then it's precious. Because if this person continue in the crypto industry, you will meet him again, you will maybe build a project together one day, and that's really the great thing. I must say, I have crypto friends. I don't really have TradFi friends.
Wow, that says a lot.
Yes.
Yeah, I'm with you there. I keep saying that Web3 is for the people, and I think you kind of summarized that really well. Listen, thanks again. How can people find more about the work you do, where you're going to be speaking? If there's any, are you launching a book at any point? Like, what's the path to learn more about you and the stuff that you do?
You can reach me on LinkedIn. I know it's not very crypto native, but it's a public place, so you can always reach me, and I always take the time to answer. There might be some lag sometime, but and I really try to take the time to help people, because people help me. It's simple as that. So don't hesitate. And yes, if you work for an asset allocator and you want to be more implied on this topic, it's really our priority right now. We are doing interventions. We are participating to roundtable at private equity events. So it's very TradFi, but we are here to bring crypto to the table, and there will be an event in September. The deputy CEO of Bpifrance will talk about crypto, and we're very proud of that. And we should have more crypto roundtables at traditional finance events. It's still seen as, oh, these funny guys, or yes, this funny thing. Well, again, now with stablecoin thing, we really are in the middle of the game, and it's great.
Ivan, thanks again once more, and looking forward to meeting you and bumping into you in an event somewhere. That would be great.
Thanks to you.
Thank you.
With pleasure.
Catch us online. We're on Instagram at BlockDropsPodcast, on Twitter at BlockDropsPod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shout out to Ivan for 2 recording sessions and a very deep conversation on the current and future prospect of crypto as an economy. Also, shout out to Celine Suntai for making this conversation possible. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird. LFJ.